in terms of a play on this one, if Chris is right and it comes in around the 24-cent level, Morgan Stanley's still clinging to a view that there's value here. What are you hearing?
Well, the brokers are a little bit mixed about this one. We've seen some revised targets coming through. Morgan Stanley, as you mentioned, overweight on 10 with a 50-cent 12-month target. Credit Suisse also out with an outperform, though UBS having a sell on the stock with a 20-cent target. If we have a look at the ex-theoretical price, it is at 27 cents. That compares to the last traded price of 32.5 cents. But the fact is for 10, it's very difficult predicting revenue because it's all around programming and trying to predict the popularity of some of its programs. So in terms of broker forecasts, there is a wide range because this is a difficult business to predict. I guess there will be some weakness in terms of the share price and some uncertainty because we know that conditions have deteriorated since the AGM that we saw back in October. We haven't yet seen an outlook statement coming through from 10, but we would be expecting one in the next few months. But what we know at the moment is that things have deteriorated from October. We've seen this capital raising now in place, but really what the market wants to see is some improvement in the programming and hopefully an improvement in those revenues coming from advertisers.
Potential implications for our market in terms of the issues that might throw up in the next few weeks for us?
Well, we know that the European situation is very much in focus, and uncertainty coming through from Italy over the resignation of Monti after the Italian budget has been decided on would be a negative in terms of the Eurozone. Not only that, over the weekend we also heard from the Bundesbank, and they did decrease their forecast for growth for Germany. Previously they were forecasting 1.6% growth. We've seen that revised down now to just 0.4% growth for 2013. So still keeping a close eye on that European situation, but it does look like there's still some uncertainty there. But of course, at the moment, it's all about the US. And in terms of the fiscal cliff, we're watching that one closely. We saw better non-farm payroll numbers coming out, and that's a positive in terms of the US economy. But we will be watching that countdown to negotiations, given that that Christmas is now only 2 weeks away. We also saw some China numbers out, and they were better than expected. Industrial production coming out at 16.1%, and retail sales also better than expected. But all up, the Australian market inching towards the highest levels of 2012. We're watching that 4,581 point mark very closely. That's the highest point that we've seen in 2012 so far for the Australian share market. We're around about 20 points away from that, and if we can crack that mark before year end, that would be a new high for the Australian market.